Good day. This is the Eye of the Storm podcast with the big picture technical update for the NASDAQ 100 being recorded on Saturday, April 27th, 2024. I am going to start here in the cash market. I'm going to show the NDX, but just to give it a little reference, I am continuing to run two counts. One I'm calling the A version of the preferred count. The other is the B version of the preferred count. The A version, more bearish of a type of near-term picture, and the B version is more bullish for the near-term picture. Where these markets have been sitting for the last week and actually prior to this keeps both alive. But my feeling on a technical basis, and an Elliott wave basis, we've kind of reached an area or a plateau, you might call it, where the market should be making a decision and for the near term. So either the more bearish gets invalidated and flips to the remainder, which would be the B version, which is the more bullish version. So that one I will show you within the NASDAQ future, within the NQ. Coming back here to the cash, if I'm counting that the highs are in, and again, let me just pop out to the daily and we'll see. There is the primary A wave. That low is right here, and that was in October of 2022. From that level, we've done an intermediate degree ABC up to put in a primary B wave, and that is at the mid-March highs at 18,465. And from there, we have been the starting phase of a primary C wave down. And within that primary C wave, we're in the very beginning stages of a first 5 down, which I'm doing on a minor degree. And within that, going back down to my 4-hour chart, that with 4-hour chart, yeah, there you go. What I'm really looking at is the first 5 down on the minor wave one, and that is going to be put in by, excuse me, on the brain, minute degree of 1, 2, 3, 4, 5, by minute degree, where we have 1, 2, and 3. This is wave 4. So wave 4 right now, yeah, kind of look like it's getting a little bit too big. And I don't normally would look for a fourth wave to go to 0.618, which is 17,831 right there, where it cannot cross. And that's where it would really become invalidated. First, my doubts will really rise very quickly on a stronger break above 17,832. But 17,000 right there, 18,002 for the cash market, 18,002. I would not want to see it below that, or excuse me, above that level, and I cannot call it a wave 4 anymore. Then it goes over to the B version. So that's what I mean, that I think we're there. We're at that decision-making point where the market is finally going to let us know, yep, over a short term, we're going to start to continue to move higher and complete. And so what would be down here would be a minor 4, and we'd be looking there. Again, I'll go into it in a minute. To the downside, should that come in, well, let's just kind of now begin to fill in some with what we have and what's coming out next week. And then we'll go to finish up with the Elliott picture for next week. Now, earnings reports, we did get a mix, but more to the bullish side on Wednesday and Thursday of last week. Wednesday, we had Meta. And in Meta, not bad earnings, continue to make money, continue to forecast that they will continue to make money in sizable amounts. But the company did make an announcement that their intent was to spend up to $40 billion this coming year into next year, I believe, working on the artificial intelligence and development, and also the virtual reality products that Metaverse is developing and working and wanting to sell. So that the market went, that's expense that you guys absorb, and we're not going to include that within the price of the stock. So they discounted it, and we had our move. Thursday, the market got Microsoft and Google both good, both showing that these gigantic companies with some heavy weighting in the NASDAQ, both still have a ton of cash. So that was more positive. Now, the actual Friday's trade started out giving the nod to the earnings, and then they really could not break above 17,072, and that was the high. And then it kind of just faded until the close. Didn't come off tremendous amount after the high at 17,772. It closed at 17,018. So, a little bit, not much. Now, what I would be looking for here, and I'm first going to go and finish my earnings, that we have earnings on Monday, and it's after the close, MSTR. Those are the more major ones that may have an effect on what happens within the index. And then after the close, or before the opening on Tuesday, we have PayPal. And so we'll be looking at those. Then after the close on Tuesday, we have SMCI, Riot, AMD, and Amazon, Starbucks, FANG. So we have a fair amount that could pull the market in one direction or the other. And then on Wednesday, on the 1st of May, we have some reports that will be coming out after the market. More importantly is the Fed decision. That's on Wednesday. I'm not expecting earnings to go anywhere, to be honest with you. I believe that we remain unchanged. We'll get another narrative surrounding a robust economy and what's going on and all of that good stuff as Powell comes to the mic at 2:30 Eastern on Wednesday. Big on Thursday, on the 2nd of May, after the close, is Apple. And of course, there are others that will be coming out as well, but the big one, then the focus will be on Apple, on what their earnings will be. Now, in terms of call walls and put walls, I'm not real certain on with the NDX, because it's more in the Qs. And so I just feel that these levels that the markets are trading at are kind of surrounding them. For example, the call wall being at 428, that's on the Qs. And that now has been triggered with the Qs closing at 531, not magnificently, not magnanimously, but enough. So combined with where the put wall and the call wall sit for the SPX, right? Which a lot of it, of course, is a lot of the Mag 7 sit in the SPX. So that together could start to really bring prices higher and negate this particular count that I'm looking for. If the cart is upset with the Fed saying something that the market is confused about or doesn't like, or on a technical basis, the market starts to just decide to correct a little bit from here, and because the RSI is a little bit too high, then we could put a 4 up here, and we're looking for it to come down with not total speed, but more in line with what we're seeing here. It should kick off by coming back inside this range and begin to move lower and not threaten higher resistance levels, and of course the maximum. So on a moving average basis, the 200 already is sitting above. The 50 went flat. With that big move, went flat along with the 200, absolutely flat on the 4-hour chart. What's rising, of course, are the 13 and the 20. The 13 is now above the 20. But if we turn and start to head lower, so that's the difference between the NASDAQ and the SPX. The SPX is more favorable for continuation to the upside as the 200-day sits below. And that would be on the daily chart. And I can move real quick, just take a look on the daily chart. And you can see it is kind of the same situation, except the 50 was up above. Now, if these continue and to move up, then we've got it lined up again to finish and to go above. And if it does, then it's going to be the B version, and I'll get to that in a minute, but it invalidates this. So coming down now, we'd be looking for the move to be in terms of a minuet wave 4, excuse me, wave 5. This would be 4. We'd be looking for 5, and that projects, we'd be looking for a low below 16,973. That's the low thus far from last Friday. We're looking for that to be broken. 1.618 gets us close, but doesn't do the job. So we'd be looking for that, but maybe not as far as 16,562. I think we got some other levels in between there that would really spark. I mean, if they broke, we might get a flush down to here. But it's not necessarily what I'd be looking for. I'd be looking for a 1, 2, 3, 4, 5. One somewhere between 1.618 and maybe 1727 or something like that nature down in here. And then for the market to put in minor wave 1 and then do a more sustained ABC. And which in case we'll go all the way from here down to wherever it would bottom to put our resistance levels. So the market should continue to hold in my near term to slight midterm. So we're looking like the next month to 3 months. I'm thinking that it's going to hold above 16,500. I'll give it above the 200 moving average and come down, give it a look, and then put a 1 and then go ABC up. And so we're looking like the next maybe 3 months out. So we're looking out to September on this possibly. And that's where the market could kind of hang out. And that still would be under a more bearish. So in other words, we finish minor wave 1, we do a minor 2 counter-turned rally. And we'll be, and if it is the case, we'll get fibs that'll go along and we'll have levels. All right, so over in the NQ, let's see. Now this one, of course, is the B version. And in the B version, we still have that wave A at the end of October or mid-October 2022. And then we have an A, B, and yet we're still in the C wave. So within the C wave, which will consist of 5 waves of minor degree, we have minor 1, 2, and 3, and then we just put in wave 4. Right? Minor wave 4, that was that low on the 19th of April. And let's kind of open that up and let's take a look. So there's the high, finishing the whole thing, finishing that minor wave 3. And then this is minor wave 4. And then we have an expanding triangle leading, and that is wave A of the 4. And then we had a B of the 4, and then 1, 2, 3, 4, 5, wave C, wave 4. That is pretty clean. If I had to, when we were looking at the other one, it would be a starting diagonal, a beginning diagonal, and it would be wave 1. Wave 1, wave C, wave A, all are capable. Wave C, you're looking for an ending. And wave 1 and A, you're looking for starting. And then this would be wave 2, and this would be wave 3. So following along, this is the more bullish pattern. And here we are coming out of that. Now this I don't necessarily like. So this is what holds me to giving at least a 50% probability to the A version. that this all just kind of comes down now. And if it does, it's going to go fast. And still in time that maybe we get a decent picture from mid-May from NVIDIA's earnings. That is the stock that remains in play. So I will consider it and what's actually going on and how that all is going to play out. So near term to mid, I think the futures market, 17,100. If we really start to come, is where the range, and then we build. So this should be going up. And if that's the case, then what we're really looking at is that it will go up and it will exceed, right? So we come here and we break the 200, the 4-hour 200, which sits at 17,994, and that gives us, and then we if we're working our way higher in another diagonal, so an expanding fifth, a diagonal expanding, finishing, right? Kind of gives you the opposite of that. This is the finishing. In a fifth wave position, all of this is going to be threes. So that fits much better than it did over in the NDX, where it's like, is that a 1, 2, 3? No. Is it a 3 or is it a 5? In this case, I count it much easier as an ABC. And it's wave 1. An ABC for wave 2. An A, or 1, 2, 3, 4, 5, a little bit higher. That's wave A. We get a B, and then we get a C. So we could be out until Tuesday with what we have on Tuesday, Amazon. So that could be the next Mag 7 that gives us that third wave pop. Then we'll be in that level again where the A version drops. We can remember, we cannot cross 18,005. Oh no, it's the low, 18,072. Starts going above that, well, on the futures basis, you're crossing wave 4. So that knocks it out, and then it becomes this, and I'd expect it to kind of accelerate a little bit, depending on where we come in here. If this is an ABC, we may come down in an ABC, and that would be the B wave of the third, right? With 5 waves of minute degree. And we got a ways. So wave 3, 1.618 is 18,339. Yeah, okay. C wave up, and then we come down, and then we go back up. Right? 1, 2, 3, 4, 5. And ultimately break above 18,709. There's some top side, but just 18,709. Then we're done yet again. So again, my whole picture remains in near term. We do have the possibility, the potential, and depending on how things play out in individual underlying stocks, the capability of getting the market up here on maybe not so high volume, maybe not so grand and broader participation, but again, focusing more on a group of stocks. So that's the other side. But we're at that point again. We could break. If we end up doing 5 up, it still could be an ABC. It still could be a 4 on the other count. What the line in the sand again is 18,000. We'll call it 50. Actually, call it 75. 18,075. Pretty much anything above 18,000, I'm like, no. I'm going to take it as a 1, an A, a B, and we're going to do a C wave to complete a 3. So I think that's the point also I want to make. We're at a level that I'm beginning to believe that we will get our decision in terms of direction, near-term direction. Not this fresh breakout, not this bull market that's just going to keep on dragging us forward. There are other factors that will come in and are going to have to be dealt with that aren't technical, so I don't really want to start talking about them right now. Minor wave 5 has potential at least 18,367. That might just be wave 3. Then we get a 4, and then we get a 5. Looking for ultimately that it does break above 18,709. That high gets taken out. And above there, our resistance, this would be for wave 3, so it's not as valid as you may think, but in terms of the fib for minor wave 5, we have 19,142. Once I get a 3 and a 4, then I can label and stick 5 on there and see what matches up into this area. On this trend line will change once wave 3 comes in, and it'll have more of an angle to it, depending on where wave 1 completes. If wave 1 completes way up here and comes down, then that's basically going to have the same angle. But if it comes up to here, then it's going to go a little bit this way. So it'll be more either parallel or expanding south. All right. That's actually where I'm going to kind of keep it. We've kind of got our look for going out, what we got coming in terms of earnings reports, and the Fed on Wednesday. The next Elliott wave update, again, will be on Monday, the 29th. So I want to wish everybody a very great balance of the weekend, and I will be back on Monday.